we detected two unusual trades on Microsoft stock on the last trading day, April 19. And what's unusual about these trades is that earnings is coming up in a few days on April 25th. So in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Microsoft for earnings. Are they bullish or are they bearish? And then show you how we are trading Microsoft based on this data. As you can see, Microsoft is trading at a very strong support level that has been tested 3 times in the past this year. Each time it bounced from it. So will it bounce again at this price level right below $400 now, $399? So without further ado, let's get to the data analysis to find out how the rich are trading Microsoft, because as we all know, they have more access to information than we do, sometimes leaked information. So as you can see here, 14,286 contracts being traded for the May 10 options, 350 strike puts, and the 350 strike calls on April 19. So what does this mean? Let's take a deeper look at the chain for the May 10 options here. So as you can see here, at the 350 strike puts, open interest of just 72, much less than the 14,000. And also on the call side as well, just 6 open interest. So we know both of these options are opening trades. And based on our analysis of other variables in the market and these options, we believe they are selling the 350 strike calls and buying the 350 strike puts. And so when we analyze this trade, you can see here, the x-axis on this diagram represents the share price of Microsoft. The y-axis represents profit. Here's the 0. If it's above 0, this line here, it is profit. If it is below, it is a loss. So, as you can see, as the share price of Microsoft goes down, this is a positive profit. If it goes up, it is a negative loss. Because this is a short position, we can tell from the Greeks as well, we have a negative delta. If it is bullish long, it would have been a positive delta. So this trade, because they sold the 350 strike calls, each of these calls that were being sold required about $13,000 of buying power. And since they did 14,286 contracts, we multiply that out to get $185 million. Okay, so quite a large amount of money being put on this trade here. Very wealthy institutional investor here. Now keep in mind, this could also potentially be a hedge. What do we mean by that? What we mean is that they could actually have underlying stock and they're using options to hedge their position, which is the most probable case here. Okay, so when we analyze their underlying position of holding 100 shares of stock, which is how many shares one option contract controls, you can see what this is actually doing here. You can now see that the profit loss line is flat for the expiration blue line, right? Anywhere Microsoft goes, it will be a profit. You'll see here in this box here, the blue will show a profit of $256 per contract. In the near term, on the purple line, it may be a loss, but through time, at expiration, May 11, when it expires, this will be a profitable trade. And that's what this hedge does. By having shares and they open these options, they are guaranteed to make money. And that is why they are called hedge funds. They continually hedge their positions to consistently make money. Okay? And that is how the rich get richer. All right? So when we look at these trades, we don't necessarily always have to trade in that direction. We have to look at the complete data of other data points. Okay? If you want to learn more on how and what we do with hedge trades, make sure to go to our website. Put a link at the top here where we do this type of analysis work, where we follow the data to set up options trades to decide how to trade to make money while the rich are getting richer on Wall Street. Okay. Now, for the second trade, that was very unusual. What were they doing? It is not very apparent on the chain, but if we scroll down a little bit more, you can see some of these contracts coming up. The May 10 390 strike puts. Okay. And it is not just 900 or 800 of them. When we take a deeper look at the chain, you can see that at this strike price, there was actually 4,241 contracts being traded for the 390 strike puts. Much greater than the open interest, so we know these are opening trades. And based on our analysis, they were buying these puts to open. And when we analyze this put position, you can see clearly a bearish trade where if the stock price goes down, the profit increases. Okay, so this as well is a negative delta trade. All right, so based on these two sets of data where they're both bearish, we are entering a bearish short position on Microsoft. How do we do that? Let's take a look at our position. Same expiration, May 10. For each of our trades at the 380 strike puts, we sold 2. And then we bought the 375 strike put, one of them, and one of the 390 strike puts. Okay, so these are our 3 option positions. And by doing this strategy, which is known as a butterfly trade, right here, you can see it costs just $190 per trade. And we have a negative delta because we want to also short Microsoft. And you can see that current price, if it goes down, it becomes profitable, right? So based on this trade, we will be shorting Microsoft. However, keep in mind, earnings is not until a few days later. So we may actually change our position on the day of earnings based on the incoming data, right? Because we are trading at this very critical level, and we could potentially either break it before earnings, or we could start bouncing before earnings, which then changes the thesis of our trade. And so we will have to take a look at the data again and decide what we want to do for earnings. And if you just saw our past video, we shared how we set up earnings trades with risk-free, no loss. Okay, so if you are interested in how to set up earnings trades that are risk-free, make sure to watch that video. We'll put a link over here. If you're interested in how we use options and trade the stocks wealthy investors are trading, make sure to go to our website. Okay, this is a low probability of profit trade in comparison to the trades that we share on our website. And because of that, we may change our trade. We want to get into positions before earnings in order to set up risk-free earnings trades, as we explained in our previous video. Okay, so watch that video if you haven't to learn more on the secret of risk-free earnings trades. Take care, smash the like button, and have a great day.